there's going to be a battle to see which cryptos are truly property versus which ones are security. And Gensler has said that on no less than 4 different occasions. He thinks many of these cryptos are security. So if it stays outside of the public policy framework for AML, tax compliance, and investor protection, it is not going to long persist.
Where's Bitcoin's role in that as the apex predator? What does that mean? Does it mean all DeFi is on Bitcoin, or it's a broadly spread digital asset world with this new technology and Bitcoin is the kind of base layer collateral of the entire thing? How do you think about that?
I think that Bitcoin is the most decentralized digital property, right? It's the highest quality digital property. We want to create a digital property running on a decentralized network that's owned by everyone and no one. Right? That's the real key. It can't pass the Howey test. We can't have, no one can shut it down. You can't have people upgrading it every quarter or every 6 months. You can't have a CEO of it. You can't have a CTO of it. You can't, you need to have something completely decentralized. Once you've got that, now the velocity of the digital property, again, when you call it digital energy, you start to see it differently. You realize you can accelerate it on layer 2 platforms, and there are a lot of decentralized layer 2 platforms. So Lightning is a decentralized layer 2 platform. You could say that many of the other cryptos, to the extent that they're decentralized, they're layer 2 platforms, right? There's going to be a battle to see which cryptos are truly property versus which ones are security. And Gensler has said that on no less than 4 different occasions. He thinks many of these cryptos are security. So as we start to see more guidance there, he's also said some tokens are commodities. So as we sort out which token is commodity and which token is a security, you're going to have a competition of layer 2 tokens. The Lightning Network runs on a layer 2 on a token which is Bitcoin, right? Which is an interesting thing, but I think that you're going to see a competition there, and then you're going to see layer 3s, and layer 3s I define as CeFi, centralized finance applications like Square or PayPal or Coinbase or Binance. Right? All of those are moving large sums of Bitcoin at high velocity. Square's got 30 or 40 million customers, and you can move any amount of Bitcoin from Square Cash Tag to Square Cash Tag instantly for free. So as you start to see those, they're going to create an accelerated finance. Between you and me, I'm not sure that decentralized finance needs a decentralized layer 2. It needs a decentralized layer 1. Like, you need digital energy to exist in order to move it at the speed of light 100,000 times an hour across 100 jurisdictions in order to do yield farming. So you need digital energy, and Bitcoin is. You need 1. Do you need 2? Not necessarily. You need 1 digital token that you can move at the speed of light 1,000,000 times a second. If I've got that, JP Morgan can get in this space, Coinbase can get in this space, Square can get in this space. Square's a bank. There's this Coinbase wants to have a lend product that has yield. The SEC says that's a security. They can't offer it. Okay, well, they didn't say you can't offer it. They said you actually have to register it under the SEC 40 Act. There are plenty of organizations that offer money market funds with yield. You're either a bank and you offer a savings account with yield and you subject yourself to banking regulation, or you're issuing a security and then you have to file that with the SEC. You're running a fund. And the NYDIGs of the world and the Fidelities of the world, they're filing their funds, with the SEC, and they're getting SEC authorization for that. So I think that there's going to be a massive competition, and there's a market competition. Will centralized regulated entities in the U.S. that have gotten certified funds approved by the SEC, will they create that opportunity? Will Square and PayPal with mobile apps, will they do it on a mobile app? They probably also need to get SEC approval to offer it as a mobile app, right? Just because you have a mobile app doesn't mean you don't have to, you saw Abra has this issue where they have to get approval from the New Jersey authority to offer a yield product on a mobile app. So you're going to have the technology players wanting to get into space, call it fintech. You're going to have traditional players like Fidelity wanting to get into space through traditional funds. You're going to have these interesting Lightning-based things that want, there's non-custodial wallets in Lightning, like Moon and Breeze. Then there's custodial wallets like Shivo, right? And Shivo's got, can Shivo move Bitcoin around with a banking license? Sure they can. Why? Because El Salvador made Bitcoin legal tender, so that's why they can. Then you're going to have the crypto space, with Ethereum and Cardano and Binance Smart Chain and Solana and all the rest competing. And you're going to have all sorts of issues of competition versus, technology versus regulation. And then you're going to have jurisdiction. And, Binance and FTX are offering very innovative products, but they're not offering them in the U.S. So what will happen? And the answer is stay tuned. I just watched yesterday a senator, Toomey, ask Gary Gensler, can you please, is a stable coin a security? And Gensler said, it well may be. He didn't say it was. He didn't say it wasn't. He said maybe. And Toomey said, well, it doesn't seem like it to me. And, because I'm not pursuing profit. Of course, and Gensler's response might very well be, yeah, but people on the other side of the trade, the people that issued the stable coin, are trying to borrow $60 billion at zero interest and lend it out at 60 basis points. They're pursuing a profit. This is why it's an unregistered money market fund, and you got to come and register with us. So they went back and forth, and at the end of the day, Toomey said, you need to give me clarity. Okay, instead of actually regulation by enforcement, why don't you actually publish something? Okay, and Gensler is kind of saying, I hear you. Now what's going to happen? What's going to happen? I think we can expect over the next 12 months, you're actually going to see more guidelines about this. But it's pretty clear to me in the last 12 weeks that if you really want to win the DeFi space in the next decade, I think the winners, Raul, are going to be the publicly traded institutions that know how to navigate the corridors of power, right? That the ones that if you can take your company public and you can raise $10 billion via a registration statement, then I think you're going to be a big advantage. I think that Fidelity issuing an ETF is going to be a big advantage if they get their ETF approved. I think the NYDIG is going to have a big advantage. I think that people that are trying to operate outside of that system, if you can't tap into the public markets, I don't know if you noticed, I just sold nearly $400 million worth of equity into the public market via registered ATM, and then I converted into Bitcoin. And I did that in 3 weeks. Okay, so in 4 weeks, not that much effort, I put $400 million into this ecosystem. And you know how long it took me to gather the first $400 million? 30 years. 30 years of 2,000 people going through millions and millions of transactions to get the first 400 million. Few weeks, couple of people get the next 400 million. Why? Because we're publicly traded, because we follow the registration statement, because we can tap the capital markets. Gensler says this to the Senate yesterday, I quote, "If it stays outside of the public policy framework for AML, tax compliance, and investor protection, it is not going to long persist," unquote. I think that's pretty clear.